It's time for the Your Personal Bank Show with Ferenc Toth. In an era of chaos, confusion, and craziness, Ferenc is a voice for common sense. As a financial literacy educator, speaker, and entrepreneur, Ferenc cuts through the noise to help us understand how current events affect our money, economy, and our freedom. Now, here's Ferenc Toth.
Welcome to the Your Personal Bank Show. This is Ferenc. If you want to reach me, you can do so at yourpersonalbank.com. Email Ferenc, Ferenc, at yourpersonalbank.com or 866-268-4422. Yes, you will reach me. It's quite enjoyable and humorous when folks reach out to me after listening to the radio show, and when they call, either I do answer if I'm available or I get back with them, and they'll often be very surprised and say, oh my gosh, it is really you, and you sound the same. There's really no difference in person or on the radio. You see what you get. I'm just sharing for the heart. I am blessed. I don't have anybody tell me what to or not to say. That's very rare in media these days. So it's just me. I'm a real guy who's just out there with a lot of experience, who deals with regular people every day, coast to coast. I'm blessed my show airs on over 25 stations across the country. I'm literally in Boston, Florida, Seattle, California, Hawaii, and most metro areas in between. You can catch this show on Spotify, Apple Play, or 30 other platforms. It's just grown through sharing valuable content, educating people, and mostly just sharing from my heart. Particularly thankful this past week because, oh my gosh, last week I really struck a chord. I had more people reach out to me this past week from the radio show than I have on, I believe, any show I've done in the past 5 years. Two main topics last week, if you missed it, were one of the greatest challenges of our generation is the lack of election integrity, how that impacts our country in the future. And I shared some of the main reasons why so many people have suffered from poor performance from index annuity products. I got responses on both topics significantly, so I want to thank you. If you did miss the show and you want to listen to it, you can go to my website, yourpersonalbank.com. You can click on Listen to Previously Recorded Shows. Each has its own topic. Today, I have some additional lack of election integrity information, but I also want to touch on the primary reasons why people have suffered with poor index annuity product. I want to ask you a simple question. Is it time to refinance your annuity? Now, what do I mean by that? I'm going to cover the top 3 reasons why you've likely been suffering poor performance and why index annuity products have a reputation of poor performance. In fact, it's often said if you want guarantees, you have to give up strong performance. That is completely untrue. That is a myth. Recently, the state of New Jersey admitted to over 6,000 illegal aliens were registered to vote in the state. Now they're admitting that over 75,000 have received jury duty summons each year. Obviously, if you're receiving a jury duty summons, you are also registered to vote. They are now admitting over 100,000 fraud voters that are registered to vote and are reluctantly slow-walking this narrative. New Jersey has an estimated 1 million illegals living in that state, and are now admitting to about 100,000 of them illegally registered to vote. This is what they admit. What are the real numbers? And an organization called Massachusetts for Fair Elections has completed an analysis of census data in the state of Massachusetts. They have exposed that over 200 municipalities out of about 350, with over 100% of eligible voters who are registered to vote. When you have more people registered to vote that are eligible, that is rife for fraud. And Pennsylvania recently just released a major cleanup where they removed tens of thousands of Democratic registrations because they were not citizens. And according to 2023 census data, senators of over 12 states have more registered voters than voting-age citizens in it. Not surprisingly, most of these are blue states, like Colorado, Georgia, Maryland, Massachusetts, Michigan. There are 3 red states that stand out, Alaska, Kentucky, and South Dakota. And not unsurprisingly, Those three states have some of the biggest rhino Republican senators: Alaska, Lisa Murkowski; Kentucky, Mitch McConnell; and South Dakota, John Thune, who all have been adamant against the Save America Act. It's being openly questioned why they are against it, and many are coming to the conclusion that the reason that they are senators from that state is due to illegals or non-citizens voting for them. And it goes beyond just election integrity. This is all related. It's been documented that illegals have been receiving tax dollars to purchase houses and obtain mortgages. For example, Miracle Lender pitched itself to Latino borrowers with social media advertising in Spanish. A loan officer for the company stated in an Instagram post that credit doesn't matter. Miracle Lender found ways to get illegals mortgages without involving banks. They cited one example of an illegal obtaining a $412,000 government-backed loan through Gen Home Mortgage Corp., a non-bank lender, so they could buy a 4-bedroom home in Lancaster, California. These are taxpayer-backed loans. This is an illegal immigrant with no credit score, no credit history, is paid in cash under the table, pays no taxes, but gets approved for over a $400,000 mortgage to buy a new house with a taxpayer-backed loan. There are many American citizens with good credit scores, credit history, pay taxes all their life, do it the right way. Some even make upwards of 6 figures, yet can't get approved for a $400,000 loan. Yet this interloper can buy a brand new house that's backed by the taxpayers. This is the unfairness of the system that's been in place, and why the term sanctuary city should be changed to harboring fugitives. These are some of the side effects of lack of election integrity, allowing non-citizens to come into this country, government benefits, taxpayer-backed mortgages, driver's licenses, social security cards, registered to vote. These are all incentives that are put out there so that it's been documented that they support and now vote overwhelmingly in favor of the Democratic Party. This is nothing more than a pay-for-play scheme. It's bribery and absolutely illegal. It dilutes the power of the citizen voter. For every illegal vote, that takes away one legal citizen's vote. As I stated last week, this is the challenge of our generation. The first step is education. Fortunately, there's been a lot of that. More and more people are becoming aware. The next step is electing representatives that will represent the citizens, not their own personal benefit. And the Save America Act is a perfect example of this. Look who's for it and look who's against it. And those that are against it are benefiting from the wave of illegal or non-citizen immigration, either through direct voting or other nefarious methods, and therefore personally benefiting as a result. This is a big challenge. A lot of the changes that we've seen in our country and society will continue to do so and will only get worse unless corrected. Those that benefit will fight this tooth and nail, as we are currently seeing. So it's a big challenge, likely chaotic, uncertain. The markets, the economy do not like uncertainty. If you want to protect yourself, this is the golden era of fixed assets. It's the best time in over 40 years to consider index annuity products. Also, if you have one with poor performance, I'm going to share later in the show how to double or even triple your returns, why likely you've been suffering poor performance previously, and how to fix it. So stay tuned.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422.
This is Ference, host of the Your Personal Bank Show. My show focuses on creating tax-free buckets of money, insured, guaranteed, highly liquid, and the ability to create positive arbitrage. Did you know this is the best time in over 40 years to invest in index annuities? An index annuity allows you to 1. Grow your money safely without market risk. Once gains are locked in, they're guaranteed against future market loss. 2. Double-digit potential upside on good market years with no losses in bad years. Principal is guaranteed.
3. A 7 to 8% fixed interest option is available in the first year. If you're interested in growing your money with potential index-related gains without downside market risk, this is the best time in over 40 years to consider an annuity. If your annuity is over 2 years old, the newer products likely have far superior potential returns. Please contact me at yourpersonalbank.com or 866-268-4422 for more info. That's yourpersonalbank.com.
Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. This is Ference. If you want to reach me, you can do so at yourpersonalbank.com. Email Ference, F-E-R-E-N-C, at yourpersonalbank.com or 866-268-4422. Yes, you will reach me. In the first segment, I was discussing the lack of election integrity and some of the side effects as a result. Not only have illegal immigrants been purchasing homes in the United States backed with taxpayer-funded mortgages through non-bank sources, the legal immigration visas have been abused also. Last year, in 2025, Indian nationals alone purchased over $2 billion of U.S. homes. Now, I'm not here to pick on a certain group of people. I have close friends of Indian descent, but the facts are the facts. You have to follow the money. Nobody believes the work visa is temporary, not even the banks. Why would banks offer a 30-year mortgage against a visa that's issued supposedly 3 years at a time? It only makes sense if one thing is true. The lender expects the borrower to stay. According to an NAR 2025 report, 97% of those buyers were already living in the United States. Over half of them took out U.S. mortgages. Fannie and Freddie buy these loans under the same terms that are available for U.S. citizens. This is a direct quote from Fannie's selling guide. Now, how do you turn a 3-year work visa into a 30-year loan? Because under the 6-year limit, quote unquote, it has a loophole. There's a 2000 law called AC 21. Once a green card case has been pending a year, the H-1B renews for 1 or 3-year increments with no cap on renewals. If you file for a green card, the temporary visa becomes indefinite. Currently, there's over 1 million green cards in the waiting line. The Cato Institute puts the wait for new applicants at over 100 years. Therefore, pending means forever, so the visa renews forever. And USCIS's own numbers confirm that over 2/3 of H-1B approvals were continuous for people that were already here. Underwriters see this. A pending green card counts as evidence the income will continue. So the mortgage industry looks at temporary and prices it as permanent. With foreign workers coming into this country by the millions and then allowed to purchase homes under the same arrangements as a U.S. citizen, it drives demand up, therefore pushing prices up. This benefits the real estate industry, the mortgage industry, and those that already own property, but disadvantages those that want to get into or want to purchase a home. This is why homeownership has become far more expensive since 2019. Not only have home prices increased, but so have the cost of emergency repairs. They're up over 175%. Maintenance is up 85%. Insurance, 72%. Interest, over 35%. Property taxes, over 30%. And principal payments are up over 20%. And this is all according to the Wall Street Journal. And then there's another challenge. Social Security and Medicare. We keep being notified that they're running out of money. But programs like SNAP, EBT, Section 8 housing, Medicaid, and WIC, and cash welfare seem to have limitless funds. Many of these foreigners here, legally and otherwise, have received Social Security numbers, are receiving government benefits. It's not that these programs are running out of money. It's there's too many people on it, many who never contributed to the system. Now, there's a little bit of good news. Doge, who is still very quietly doing their work, 12 million scammers from the Social Security system, all had birthdays listed over 120 years old. Now, if somebody was over 120 years old, they would be in the Guinness Book of World Records. So this is obvious fraud. And if you just take a simple number that if each of these 12 million plus scammers were receiving just $1,800 a month, Doge just saved Americans over $22 billion a month from Social Security alone. This is not a political position. Anyone who receives Social Security or planning to should want fraud, waste, and abuse eliminated. The level of fraud has been found in Social Security and other government programs has been so mind-boggling, so huge, it literally threatens the future of these programs. Therefore, if you want to receive Social Security or continue to do so at similar levels, you should be adamantly against waste, fraud, abuse. You should be against allowing anyone who comes from another country, legally or illegally, to be allowed to benefit from these programs. You should be against anyone receiving a driver's license or a Social Security number. These are tickets into the system. This is an entryway, gateway, if you will, into government benefits. That is, if you want to continue receiving your benefits for both yourself, your children, your grandchildren, this is existential for many people. And this is why I love this comment. I've seen this before, but I think it's so appropriate. We have a Democratic socialist who's mayor of New York, for example, and that term sounds nice, but here's what it really means. Socialism, you have two cows. Give one cow to your neighbor. Communism is you have two cows. You give both cows to the government, and they may give you some milk. Fascism is you have two cows. You give all the milk to the government, and the government sells it. Anarchism is you have two cows. You keep both cows. You shoot the government agent and steal a third cow. And capitalism is you have two cows, sell one, and buy a bull. And I saw this other post I thought was fantastic. There was a professor that had a class of students who all believed socialism was the best system. And they thought everyone should be equal, no one better, no one worse. No one is at the top, no one at the bottom. And so the professor decided to give them exactly what they wanted. Every test grade would be average, so no one could fail. No one would be the best, and no one would be the worst, and everyone would receive the same grade. After the first test results were in, everyone's score was added up, and it averaged a score of 80. Everyone received the same score. The students who studied really hard received the same score as the students who barely studied at all. Now, naturally, the students who had received an A were upset. They'd worked hard for it. The students who barely studied at all were thrilled. They hadn't invested much effort. They not only passed, but they got a good grade. And then before the second test, something shifted. The students who barely studied before didn't think they needed to study at all. They were going to get a good grade anyway. And they didn't think they need to because the others would pull their weight. The students who had studied hard on the first test decided to barely study this time because they thought, why bother? Why should I carry everyone else? So the second test score dropped to a 60, which was a D. And by the third test, no one even bothered to study at all, so the average dropped to a 40. Everyone failed. When you take away the connection between effort and reward, effort disappears from the very people who had the most of it. Those at the top didn't stop trying because they were lazy. They stopped trying because even if they applied the effort, it was not going to make any difference. And if you want to be really direct, accepting socialism is basically admitting you can't compete. You're saying, I'm willing to give up my liberty, my religion, my dreams, as long as the state will take care of me. Accepting socialism is accepting failure, which is the opposite of what America stands for. You see, America was not inherited, it was designed. And this is the most important difference between American politics and European. The European systems were accumulated from a result of centuries of people grabbing and protecting and occasionally reforming their privileges. The castle became the parliament. The knight became the aristocrat, who then became the bureaucrat. The physical hierarchy of the medieval order dissolved slowly into the institutional hierarchy of the modern state. But the direction of power never really fundamentally changed. It flowed downward. The state was the source, the citizen was the recipient. Rights were granted, regulated, and could be revoked. The government ruled. The people, from time to time, get to choose which version of the ruling class they preferred, but not too much. America reversed this direction deliberately and constitutionally in writing. Power flows upward from the citizen. The government does not grant rights. Government was created specifically to protect rights that existed before and were given by God. The Constitution and Bill of Rights are not a list of things the government can do. It's a list of the things the government is forbidden to touch. This is not a small difference. The founders knew their history. They understood the accumulation of power. This is why they created separation of powers, checks and balances, and armed citizens as the ultimate check on all of that. It's not a perfect system. It was designed to be imperfect in a very specific way, to make the concentration of power difficult, slow, and visible. Europe, over time, reformed its inherited systems, but America built from the ground up. This is why the European instinct has always been to trust the institution, while the American instinct is to limit it. And this is one of the most common things that I think many people miss. The American citizen is armed because the citizen is sovereign. In Europe, the citizen is disarmed because the state is sovereign. Everything else flows from that single difference in the direction of power. These are important distinctions to understand and to differentiate, and to make sure we don't fall into a form of government that most of us do not recognize, nor do we want. I may be closer to it than most, being first generation, my dad escaping from the Soviets, 1956. He risked his life to do so. I have first cousins who lived under communism in Hungary for years before they were able to leave. I did not experience this personally, thankfully, but I have close family members who did, and they instilled that education in me. I hope some of that is instilled in you and maybe a greater understanding that you may be able to pass on. This is an existential fight. This is the challenge of our generation. Election integrity is the key. If we have it, we can maintain our form of government and the freedoms we enjoy. If we lose it, we will probably lose those freedoms. This fight will not be easy, but it's imperative. It will likely create economic uncertainty, chaos even. Protect yourself. Index annuity products are some of the safest, best options to ensure unlimited upside potential gains while protecting against any downside market risk. It's the golden era of fixed assets, the best time in over 40 years to look at these products. I'm going to encourage you to stay tuned in the next segment. I'm going to share the top reasons why many have suffered from poor performance with index annuity products and how to fix it.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422.
I'm Ference Toth, host of the Your Personal Bank Show. This is the golden era of fixed assets. Annuities and guaranteed lifetime income are paying the best rates in over 40 years. If you looked at annuities over 2 years ago, the numbers have increased significantly. If you own an annuity over 2 years old, the new products can not only pay your penalty to switch, but are often guaranteed to outperform your current product. For more info, contact me at yourpersonalbank.com or 866-268-4422. That's yourpersonalbank.com.
This is Ference, host of the Your Personal Bank Show. Your Personal Bank is a financial concept that allows you to grow your money insured with guarantees, income tax-free, and highly liquid. Also, you have the potential to continue to earn interest on money you invest in other assets, purchase items, or pay expenses. How can you do this? First, invest in a high cash value policy to earn dividends. If you leave money in the policy, it'll grow like any investment, insured with guarantees and tax-free. Second, we establish a bank line of credit using the cash in the policy as collateral. When you access funds, you receive them from the bank. Typically, dividends earned are higher than the interest charged by the bank. You keep the difference. This is known as positive arbitrage. If you want to earn interest on money you spent or invest elsewhere, contact me at yourpersonalbank.com or 866-268-4422 for more info. That's yourpersonalbank.com.
Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. This is Ference. If you want to reach me, you can do so at yourpersonalbank.com. Email Ference, F-E-R-E-N-C, at yourpersonalbank.com or 866-268-4422. Yes, you will reach me. Is it time to refinance your annuity? This is a very important question, and I'm going to explain what I mean by that. Obviously, you don't refinance financial products, but I'm going to use an analogy that I think will make a lot of sense. Several years ago, interest rates were very, very low. If you had good credit, you could obtain a 30-year fixed mortgage at 3% or lower even. If you had an existing mortgage with a higher interest rate, it made sense to refinance to the lower rate to save money, reduce your payments, therefore paying less overall on your mortgage. It made clear and obvious sense to tens of millions of Americans, and that opportunity was there due to the historically low interest rate environment. It was the lowest interest rate environment for the longest period of time in the history of the United States. This wasn't even a generational opportunity. It was a once in 250-year opportunity, literally. Now, interest rates have changed dramatically. They're much higher than they were just a few years ago. Mortgage rates are double or more than what they were before. Refinancing a mortgage today makes no sense if you have a low interest rate mortgage to double or more your interest rate. But the higher interest rates also create an opportunity. Changes in the economy, changes in interest rates, etc., there are winners and there are losers. In a low interest rate environment, the borrowers win. That's why refinancing to a low interest rate mortgage made so much sense. In a higher interest rate environment, the lenders win. Now, how does this affect index annuity products? And why have so many people over the past decade or so suffered with poor performance? So much so that many people have bought into the myth that if you want guarantees, you have to give up strong returns. That is completely false. Let me share with you the three primary reasons why. Number one, if you have had poor performance in an index annuity product or index universal life product, one of the most common reasons is you have caps or other limits on your upside potential growth. Caps are exactly what they sound like. They cap or limit your upside. I am not a fan of caps. I do not recommend caps unless they're really high. And what do I mean by that? If you have an annual cap below 10% a year, that is way, way too low. I'll show you dozens of products with caps far higher than that, and in my opinion, they're not the best products available oftentimes. If somebody tries to tell you or has told you that all index annuities have caps, that is completely false. I'll show you dozens of products from dozens of companies that offer no caps, unlimited upside. Now, another often misunderstood aspect of caps are monthly caps. There's various iterations of this. Here's the problem with a monthly cap. You could have a 1 or 2 or 3% even monthly cap, for example. What does that mean? It means your upside potential would be whatever that cap is per month. Let's use a 2% monthly cap as an example. If the index went up in a straight line, you would earn up to 2% per month or 24% in 12 months. Well, that sounds great in theory. The problem is reality. The market rarely, if ever, goes in a straight line. It goes up and down and sideways, month to month, all over the place. And the part that most people do not understand about monthly cap products, regardless of what they call them, is they cap the upside, but they do not cap the downside for interest calculations or what you earn. Let me use an example. If you had a 2% monthly cap, and I've seen many far lower than that, but if you had a 2% monthly cap, your potential upside, as I stated, in a year is 24%. Let's assume you had 10 good months where the index went up. Well, your upside would be 20% in that year. Sounds great so far, right? Let's assume you had 2 negative months. You had 10 strong upside months and 2 negative months in that year. That would be considered typically a pretty good year in an index. Let's assume the drawdown of those 2 negative months were 8%. Can indexes and the markets drop 8% in a month? Absolutely. We've seen that in far shorter times. It's not uncommon within a year of seeing a significant drawdown in a particular month or two. Here's the part most people don't understand about monthly cap products. You can have those 10 good months where your cap was 2% per month, and that would give you an up credit 20%. You could have the 2 bad months, negative 8%. That would subtract 16% from your gains. Your net overall gain for the year, 4%. You say, well, wait a minute. My account went up 8 months of the year and only went down 2. Yes, you were capped on the upside months. You were limited on the upside potential growth on the good months, but you were not limited for calculation purposes on those negative months, the downside months. Now, with all index annuity products, all companies, if there's a negative return, the principal is guaranteed so you don't lose. That's a good thing. But for calculation purposes, those negative months are unlimited. Therefore, your overall return could be negative, which would end up with a 0 credit for you. So annual caps, monthly caps, not a fan unless they're really high. Really not a fan of monthly caps, as you can probably understand further. Annual caps are better, in my opinion. If you have a monthly cap product, I strongly recommend you contact me. If you have an annual cap under 10%, contact me at yourpersonalbank.com. Why suffer? Why continue to suffer with poor performance and limitations to your upside gains? It makes no sense when you don't have to. The second main reason most people suffer from poor performance on index annuity products is they're invested in the wrong indexes. Let me explain. There are literally hundreds of indexes available. Most of the index performance is not public record. It's difficult to obtain. Most financial agents and advisors have little or no idea what the actual performance has been over the past 1, 5, 10 years of these various indexes. It's not their fault. They just don't know, and they don't have the information, the performance reports. I have access to proprietary information that I'm told by the company less than 1% of agents and advisors have access to this. I'm often asked why. It's a carrot for them, encourage people to do business with them. They don't want everybody to have it. It's an incentive. I get a monthly update on this showing all the different indexes available, the 1, 5, 10-year results of these indexes. There's something surprising about this report, although not shocking. About 80% of those indexes average annual returns over 5, 10, 15, even 20 years is in the low single digits. Therefore, regardless of the product you own, which index you're in, there's an 80% chance roughly of you being in a poor performing index. You didn't know, and neither did your agent or advisor in most cases. It's not their fault, is what I'm trying to say. They didn't have access to the information either, so they're flying blind themselves. They're trying to make the best recommendations, I believe, in most cases. Most agents and advisors want to see their clients do well, but without that information, how can they? They're flying blind. Most agents and advisors don't even realize this information exists. So it's not nefarious. It's just it's ignorance, frankly. It's a lack of knowledge. Earlier in my career, when I did not have access to this, I was no different. This is game-changing, is what I'm trying to say. About 20% of these indexes have a history of 10, 12, even 15% average annual returns for a decade or longer. Now, is there any guarantee that a strong performing index will outperform a poor performer? next year, for example? No. But what are the odds of an index that has never done more than 3 or 4% in the past decade? What's the odds of that suddenly jumping up to 10 or 12% next year? Pretty slim. Versus an index that's averaged 10, 12, even 15% historically over 10, 15, even 20 years? Well, the odds of it doing much better are far greater. You're playing the odds. You're playing the percentages. So we steer you towards the better performing indexes. If we can recommend a product with no caps, unlimited upside, we keep the fees minimal or no fee even. There's no fee options. We help you reallocate into far better performing indexes that have a historical record of doing far better than the ones you've been in. Just those two differences alone often double, triple, and even quadruple the average returns the typical client receives. Now, there's one more reason why the majority suffer from poor returns with index annuity and index universal life products. But I'm going to share that in the next segment because I need a little more time. And then I'm going to share with you the results of some client cases I've dealt with just in this past week.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422.
This is Ference, host of the Your Personal Bank Show. My show focuses on creating tax-free buckets of money, insured, guaranteed, highly liquid, and the ability to create positive arbitrage. Did you know this is the best time in over 40 years to invest in index annuities? An index annuity allows you to 1. Grow your money safely without market risk. Once gains are locked in, they're guaranteed against future market loss. 2. Double-digit potential upside on good market years with no losses in bad years. Principal is guaranteed. 3. A 7 to 8% fixed interest option is available in the first year. If you're interested in growing your money with potential index-related gains without downside market risk, this is the best time in over 40 years to consider an annuity. If your annuity is over 2 years old, the newer products likely have far superior potential returns. Please contact me at yourpersonalbank.com or 866-268-4422 for more info. That's yourpersonalbank.com.
Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. This is Ference. If you want to reach me, you can do so at yourpersonalbank.com. Email Ference, F-E-R-E-N-C, at yourpersonalbank.com. or 866-268-4422. Yes, you will reach me. People are often surprised by that still, even though I've stated that now for years on the radio. But yes, if you call, I will answer if I'm available. If I'm in a meeting or something, I'll get back with you. But you will reach me, not an assistant, and I'll be happy to answer your questions or give you more information. Or if you just want some information, email me what you're looking for, maybe your situation, and I'll send you some additional info and you can see the difference for yourself. The main thing I was focused on last segment was covering the primary reasons why so many people have suffered from poor performance with their index annuity or index universal life products. So much so that these products have gotten a reputation of being poor performers. In fact, many people think that, well, if you want guarantees, you have to give up strong returns. I'm here to say that is completely and totally false. That is a myth. I'll grant you, many people have suffered from poor performance, but that's because they're in products with caps or other limitations that are limiting their upside. There are many, many products without any caps whatsoever, which means totally unlimited upside potential growth. I'm not a fan of caps. Why would you limit your upside potential growth? That makes no sense to me. Secondly, the majority are invested in poor performing indexes. I have an index performance reports that show the last 1, 5, 10-year returns of hundreds of indexes, and the majority, about 80%, average low single digits, while about 20% average double digit, 10, 12, 15% even, average annual returns over the past 10, 15, and even 20 years. I will show you these. This is not projections. This is actual returns. And the numbers I share with people are net, 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 which means after any costs, fees, if there are any, gets credited into your account. Isn't that what matters? How much you make. Now, there are low and no fee products available even, so also, just so you know. But let me touch on the third most common reason why many people suffer from poor performance with their index annuity or index universal life products. And it has to do with interest rates. And the statement I made at the beginning of the last segment, is it time to refinance your index annuity? What do I mean by that? Millions of people refinanced their mortgages when interest rates were super low a few years ago to lower their cost of borrowing, to lower their monthly payment. With a higher interest rate environment, which we're in now, over double, in fact, and likely to continue by most experts for the next decade plus, the reasons behind it have to do with the federal debt, long-term bond yields. I've discussed this many times in the past and will again in the future, but I want to focus on other things. Just understand that this higher for longer interest rate environment that the Federal Reserve themselves even state is likely here to stay and likely here to stay for many years to come. We are in a different interest rate environment than we were just a few years ago. And the key to understanding why the index annuity products are so much better today than they were even in 2022 or prior has to do with the interest rate environment and what the insurance companies do with the money when you give it to them. When you invest in one of these products, the insurance companies primarily buy a bond. They have other side investments, but their main 75-80% typically of their portfolio are invested in bonds. And they buy the bond and they stick it in their safe and they never touch it. This is why they're able to protect the principal or guarantee the principal and guarantee that you never lose money, regardless of what the index or the markets do. Often people are slightly confused by that or don't understand how they're able to do it. That is how. They purchase the bond, they stick the bond in the safe, and they never touch it. Now, what do bonds do? They pay interest. The insurance companies typically they'll take the interest only from the bond and invest in options. If you understand options, you know that they can increase exponentially. An option on an underlying stock or index can increase 100, 200, 300% or more even in a year or less, for example. Why? It's quite simple. If you bought a stock for $10 and it went to $11, you made a 10% return. Most everyone understands that. You could also purchase an option on that stock, and let's say it cost you $1. And now that underlying stock went up from 10 to 11. As I stated earlier, your option would increase in value from $1 to $2. That's a 100% increase in value. This is how options work. Now, if you invest principal monies that you don't really want to lose in options, you can have an exponential returns, but you also can lose it entirely. Here's the other side of the coin. If that underlying stock goes from $10 to $9, in the stock you lost 10%, but if you bought that option, it would expire worthless. In an option, you can receive exponential returns, 100, 200, 300% or more, or you could lose it all. This is why options trading is considered very risky. Now, the insurance companies eliminate that risk by never touching the principal. Remember, they bought the bond, they stuck it in their safe, they never touched it. They're only invest the interest off of the bond. So either the option goes up in value, and it can go up substantially. I have clients with index annuity products in the last several years who have received 20, 22, and even 27% returns in 1 year alone. That's not the normal, but I want you to understand that does exist. I have many clients who have averaged 10, 12% average returns over a decade plus in index annuity products because these options can provide exponential returns. Now, again, if the underlying asset goes down in value, the option expires worthless. Does the insurance company owe you anything? No, they guarantee your principal, but there was no gain that year. The index for lost value, the option expired worthless. You get a zero credit. The good news from your standpoint is the market, the index, whatever went down, you didn't lose your money. That's good news. But what happens the next year? The bond throws off more interest. They buy a new round of options and repeat the cycle. This is why each and every year you can have gains, lock those gains in, they become new principal, and never go backwards, even if the future returns happen to be negative. Your principal is guaranteed, and once you lock in a gain, that becomes new principal. This is one of the primary reasons why index annuity products are so popular. They do have the potential of double-digit returns and no downside market risk. The problem is people bought them at a time when interest rates were so low that the amount of interest that the insurance company received off that bond was very limited, and they could only buy a limited amount of options, which means your returns are limited. If you purchase an index annuity product, index universal life product, prior 2022 or prior, your upside potential gains are limited. Why? The reason is that the bond that was purchased paid a low interest rate. For example, a 30-year treasury in 2022 range or earlier paid around 2%. Today, they're paying around 5%. That's a 2.5 time or 250% increase in returns. That means the insurance company can buy 250% or 2.5 times more options, which means their end result can be 250% more or 2.5 times more. I actually have seen products with the same product, same index, different dates on the annuity, one prior to 2022, one more current, and the more current one returns were 2 and 3 times more. And if you think you have an older annuity, 2022 or prior, and it's going to suddenly start producing better in the future, that's a false hope. That's wishful thinking. Why? The insurance company bought that bond once. They tend to buy long-term bonds, 20, 30-year bonds. That low interest that bond is throwing off that they're able to use to buy options will be the same amount for the next 20 or 30 years, regardless of what happens. The newer annuity with the much higher interest, which allows them to buy far more options to get far more returns, typically 2 and 3 times more, will also pay the same amount for the next 20 or 30 years. It's locked in. It's not going to change. Suffering with a poor performance index annuity product or IUL purchased 2022 or prior makes no financial sense. When there are products available where you can literally double and even triple your returns. Now, the one hesitation I understand people have is oftentimes they have a penalty to get out of their existing product. The newer products, because of the profit, so much higher interest and profit margins for these insurance companies, they're able to pay bonuses to offset any penalty you may have. In most cases, in most states, I have products with up to 26% signing bonus, real money, not an income bonus. That's a whole nother discussion. Real cash bonus, credit immediately for folks up to age 89. And in some cases, even more than that. And I haven't seen an index annuity product yet that has that high of penalty. So therefore, even if you had, say, a 10% penalty to get out of an existing product, which would be considered a pretty high one, and you got a 26% bonus, you're basically about 16% ahead of the ballgame day one. When you're talking about significant amounts of money, I have actually worked with clients that have received over $100,000 bonuses and higher just for switching their accounts over. That's game-changing. And not only that, on top of that, their new product, the upside potential gains with eliminating caps or other limitations or putting them into better indexes or both, their potential upside going forward is oftentimes 2- and 3-fold higher. And to finish with this, I want to share a review I did last week with a client that did not get stellar results. This is not anywhere close. In fact, this is one of my worst results in the last year. But I just want to share with you how even some of the worst results are still far better than of what happened previously. I did the first year review with a client who had owned an index annuity product the previous 5 years before I met him. He had invested $150,000. His return over the previous 5 years, total return was a little over $8,000 or averaged out less than 2% per year. That's pathetic. We did his first year review. His actual return, credit in the account, for the first year was well over $10,000. He made more in 1 year than the previous 5. And no, it wasn't all bonus. It was actual returns because we had a better product, no caps, better indexes, more upside. The insurance company had more money to work with from the interest from the bond they purchased to get more options to get a better return. My comment to him was, the return was okay in my opinion. I gave it maybe a C- from what I've seen previously. He was happy. He said to me, if this is the average return, I made more than 1 year than I did the previous 5, and I have no downside risk, this is fantastic. That is what I deal with normally on a regular weekly basis. Increase returns for folks 2, 3, 4, 5-fold even, with no downside market risk based on what they had before. So who should contact me? If you have any kind of caps in your index annuity product or IUL, you should contact me because there's better options, no cap options. Your annual returns have been subpar, anything below 7% annually for the past few years, you should contact me. And if you purchase an index annuity product or IUL in 2022 or earlier, I can almost assure you that the new products will outperform that one, often 2 and 3-fold. If you have a penalty to get out of any of these, we have bonuses that will offset that and then some, put you up significantly more than what you were at before with far more growth potential going forward. If this sounds interesting to you and you want more information, contact me at yourpersonalbank.com. Email Ferenc, F-E-R-E-N-C, at yourpersonalbank.com, 866-268-4422. Stay tuned next week to the Your Personal Bank Show for more great information. And as long as it's on our money, in God we trust. This is Ferenc, host of the Your Personal Bank Show. Your Personal Bank is a financial concept that allows you to grow your money insured with guarantees, income tax-free, and highly liquid. Also, you have the potential to continue to earn interest on money you invest in other assets, purchase items, or pay expenses. How can you do this? First, invest in a high cash value policy to earn dividends. If you leave money in the policy, it'll grow like any investment, insured with guarantees and tax-free. Second, we establish a bank line of credit using the cash in the policy as collateral. When you access funds, you receive them from the bank. Typically, dividends earned are higher than the interest charged by the bank. You keep the difference. This is known as positive arbitrage. If you want to earn interest on money you spent or invest elsewhere, contact me at yourpersonalbank.com or 866-268-4422 for more info. That's yourpersonalbank.com.
Contact Ferenc at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. This show is designed to provide accurate and authoritative information. The presenter and guests of this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Some products discussed may have limitations and not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Dividend rates and bank line of credit rates may change. For current rates, contact Ferenc at 866-268-4422 or yourpersonalbank.com. Again, that's 866-268-4422 or yourpersonalbank.com.
I'm Ferenc Toth, host of the Your Personal Bank Show. This is the golden era of fixed assets. Annuities and guaranteed lifetime income are paying the best rates in over 40 years. If you looked at annuities over 2 years ago, the numbers have increased significantly. If you own an annuity over 2 years old, the new products can not only pay your penalty to switch, but are often guaranteed to outperform your current product. For more info, contact me at yourpersonalbank.com or 866-268-4422. That's yourpersonalbank.com.